165%. That's how much I think this stock I have in my portfolio can go up. At least because, as we will see today, in a more aggressive scenario, this stock's upside could reach 473%. So if you want to know which stock I'm talking about, well, just stick around. But anyway, today's stock has dropped around 90% since its historical peak. And I've started my position at exactly this price here, $30.44. So for now, I'm at break even, but I don't think this will last long. In the long run, I definitely don't believe that this stock will keep trading at these price levels. After all, this company has been delivering better and better results. This company has been improving a lot, and as always, at some point, this will be reflected in its stock price. So in today's video, I will tell you which stock I'm talking about and explain you 4 reasons why I decided to invest in it. So let's get to the topic. So today's stock is an Israel-based tech company that operates as a freelancer marketplace. For example, let's say you are a video editor. You can offer your services on this platform, be found by new clients, and get video editing jobs. You earn your money, and of course, the platform takes a fee, a percentage of your payment. So that's what this company does. It's a freelancer marketplace where people can sell their talents, their know-hows, and where people like me or companies can find them and hire their services. And the first reason why I'm invested in this company is because it is positioned in a high-growth segment. You see, the world of work is changing very fast. In the past, people spent years, even decades, at the same company, at the same job, but that's becoming increasingly rare. Today, most people won't follow a single career. Jobs are evolving quickly, and many are becoming obsolete. Work appears to be decentralizing, and it's never been so common to see people working independently. And today's company is precisely riding this wave of transformation in the job market. You see, more professionals than ever are offering their services online, no longer relying on a single employer. And this company is capturing that trend by operating the world's largest freelancer marketplace. Additionally, companies themselves are increasingly hiring freelancers instead of full-time employees. And today's company has been a key tool for making that happen. So that's the first reason why I decided to invest in this company, because it operates in a segment that, in my opinion, is likely to grow a lot in the future. The second reason I'm invested in this stock is because its business model is highly scalable. That's the beauty of tech companies. They're almost infinitely scalable. You build a platform and it can handle 2,000 users just as easily as 20,000. Now, you cannot say the same about a restaurant, right? A restaurant has a maximum capacity, and once that's reached, you will need to open another location to grow. But today's company doesn't have that limitation. They've created a platform, a marketplace, that can support an unlimited number of clients. This means that ultimately, this company's capex, that is, the money needed to expand operations, is minimal, which is a huge plus. Now, my third reason for investing in this stock is related to its financials. Since 2019, this company has delivered, on average, a 34% annual growth rate, which is very good. And keep that in mind because this information will be quite important for us soon when we start talking about this company's valuation. But as we can see here, in recent years, growth has been slowing down. But still, even in the last 12 months, this company has continued to grow, about 5% as we see here. And this is quite significant given that the level of hiring for small and medium businesses has been declining. Additionally, this company also operates with an incredibly high gross margin, as we see here, of 81.4% on average according to my calculations, which is simply amazing. Recently, this company also started to show profits, which, as we can see here, wasn't happening before, but most importantly, since 2020, this company has been generating a lot of cash, presenting an average 15% operating cash flow margin according to my calculations, which, by the way, as we can see here, has been expanding, has been going up, which is a very good point. So here we have growth, though it has been declining, good margins, and a lot of cash generation. Well, I like that. So now that we are already halfway through the video, I think it's time to review which stock we are talking about. But first, if you are enjoying this content, don't forget to hit the like button, and I also invite you to subscribe. Anyway, today's stock is called Fiverr, listed on Nasdaq, ticker symbol FVRR. And soon I will show you why I've said in the beginning of this video that I expect a 165% return at least from the current levels. But before we get into that, let's cover the fourth reason why I bought the stock, which is the network effect. First, what is the network effect? Think of a social network, like Instagram. If nobody were there, well, probably nobody would want to join, right? No one is interested in joining an empty social network. People want to be on platforms where others are, especially those they know. On the other hand, if there are lots of people on a social network, more people will get attracted to it. So that's the network effect. The more people use a product, app, or software, the more it attracts new users. And I'm always looking for companies with this characteristic because they tend to show pretty high growth rates, and they also tend to be really profitable in the long run. And Fiverr has this exact quality, because the more sellers you have on the platform, the more buyers arrive, and vice versa, creating a virtuous cycle that drives growth and profitability. So this network effect is the fourth reason why I decided to invest in Fiverr. So now that we've passed through some of the reasons why I bought this company, it's finally time for me to show you why I believe this stock has an upside of 165% at least. And by the way, this is not investment advice. But anyway, also, at the end of this video, as a bonus, I will share with you another important information about this company. So now let's quickly evaluate this company using its revenue as a basis. So let's use an 8-year projection here, and let's start with a more conservative approach. Now, before we go on, if you enjoy fundamental stock analysis, check out Seeking Alpha, which is the main research platform I use. Mainly because of this article part here, which allows me to read what others have already written about the investment thesis I'm studying, so I don't have to start from scratch. Anyway, I will leave a link to Seeking Alpha with a 1-week free trial and a 10% discount in this video's description. Have fun! But anyway, coming back to our 8-year conservative projection. Well, as I've told you, Fiverr has been growing at 34% per year on average since 2018, though as we've seen, growth has been declining, right? So let's project here that in the next 8 years, Fiverr is going to grow around 7% on average. And let's also project here that Fiverr will be traded at 5 times its revenue in the future, in 8 years. So according to these premises, Fiverr should trade at around $80 in the future, which would represent a total upside of 165%, or 12.9% per year. And honestly, I think these premises are quite conservative. So now let's be a little more aggressive. So let's say that Fiverr ends up growing at 13% per year, and that Fiverr stock ends up being traded in the future at 7 times revenue. So according to these premises, Fiverr's stock price should be $172 in the future in 8 years, which would be equal to a total return of 473.8%, or 24.4% per year, which, if you ask me, is a pretty good return. Anyway, as always, I will leave this Excel sheet in this video's description so you can play with the numbers yourself. And to close this video about the bonus information, the other reason that made me decide to buy Fiverr stock is that this company has a pretty good insider ownership. As we can see here in Seeking Alpha, insiders own around 13.91% of this company. And of course I like this because I like to invest in companies where the management has a lot of skin in the game. Anyway, that's it for today. I hope you've enjoyed this video and see you next time.